As of October 3rd, Tesla's share price had dropped 7.3% to $245.98, marking a 30% loss for the year ***. Following significant disclosures from the automaker, the stock price has crashed, leaving investors to question if now is the right moment to sell their shares. Greetings to all, and thank you for returning to Everything Tesla stock. August saw the largest decline in Tesla's shares this year, with a roughly 8% decline. According to Dow Jones Market Statistics, the car company's shares dropped 2.3% and closed at $869.74 for the fifth straight day. Since March of 2021, this was the stock's longest losing run. September saw a decline in the stock as a result of heightened competition and rising interest rates. The price of Tesla has now dropped even more, indicating a high degree of uncertainty over the firm's future performance. Is now a good moment for investors to sell their Tesla stock? Let's investigate. Before we proceed, please remember to subscribe and enable notifications if you enjoy this kind of content, so that you can be informed about all of Tesla's news. After the firm released its third quarter delivery figures, Tesla's stock fell to its lowest level in over 2 months. At $242.40, the shares closed 8.6% lower. Many are questioning if Tesla stock is overpriced in light of this decline. With Tesla's stock price plummeting at an unconscionable rate, investors' futures are unclear. However, let's go back a little to the events of the previous 2 weeks in order to better appreciate the current status of the stock. You acquire all the information. Make sure you watch the video through to the very end. At its second AI Day, which was conducted recently, Tesla provided updates on a number of significant initiatives that the company is currently working on. The business had originally scheduled its second AI Day for August, but Elon Musk revealed thereafter that it will now take place on September 30 in an effort to get a humanoid robot prototype from Tesla ready for testing. When the time eventually arrived, Tesla had not only updated on projects like the Dojo supercomputer, but also had a robot prototype ready. Tesla unveiled some amazing new technology to advance its self-driving program, in addition to some noteworthy advancements with its Dojo supercomputer program. Investors are uncertain as to when these intentions would be realized because the document did not provide a clear roadmap for doing so. Additionally, the firm showcased 2 Tesla bot prototypes, but fewer were shown than many had thought. While one of the prototypes was able to walk and wave to the crowd with difficulty, the other was completely paralyzed. It could create a few waves, but it was mainly helped by 4 people. While Tesla provided a few films showing the robot performing various jobs, fans of the company were disappointed and expected much more. The numerous positive remarks that accompanied the announcement of these prototypes, particularly on Twitter, made this clear. In response, Musk stated that he thought the humanoid robot could someday improve economic productivity by an order of magnitude, and that only a small number of individuals recognized the significance of the Tesla bot. This may be accurate and may have reassured investors, but it was overshadowed by Tesla's somewhat poor Q3 delivery announcement a day later. The carmaker reported earlier this month that it produced 343,830 vehicles in the third quarter and delivered 365,923 vehicles. Despite setting a new record for the automaker and surpassing the quantity of deliveries during the second quarter, the deliveries fell short of the roughly 358,000 vehicle delivery threshold predicted by analysts surveyed by Bloomberg. They also fell far short of Wall Street projections. Tesla said that the 22,093 vehicle shortage was due to delivery problems. The manufacturer claims that it's getting harder and harder to find affordable car transportation during these weeks of high logistics demand as production numbers rise. In a tweet, Musk also addressed the problem, writing, "Smoothing out the crazy end of quarter delivery wave to reduce expedite costs and relieve stress on the Tesla team, aiming for steadier deliveries intra-quarter." The stock price of Tesla fell considerably more when the company's Q3 numbers were revealed, compared to the AI Day event. After falling 8.6% to end the session at $242.40, the lowest closing price since July 18th, the shares hit their lowest point in almost 2 months. Concerns over Tesla's car demand exist in addition to the company's main problem, which is the company's falling stock. There may have been a drop in the demand for Tesla vehicles given the automaker's relatively large delivery deficit in the most recent quarter. Tesla has seen tremendous demand for EVs in recent years, despite Musk's earlier claim that the company is not experiencing a shortage of demand. But given the recent delivery figures, the impact of inflation, and the lengthening wait times for Tesla vehicles in several of its countries, the business might be facing a downturn in demand. One important consideration is the waiting period for Tesla vehicles in Europe, which can last anywhere from 3 to 5 months. Because to the increase in production and the opening of new gigafactories, the duration is still reasonable in places like China and the US. Given that wait times have an impact on demand, the demand for Tesla vehicles in Europe may decline if the waiting period stays the same. In the coming years, if demand declines significantly, Tesla might not be able to meet its target of producing 30 million vehicles by 2030. Investors tend to be extremely dissatisfied that Tesla failed to make clear just how much closer it was to providing a self-driving system, aside from the Tesla bot and the decline in Q3 earnings. Musk stated in 2016 that by 2017, Tesla vehicles would be able to travel the whole length of the United States without a driver. However, that has not yet occurred, and there are no signs that it will happen anytime soon. Moreover, Tesla has postponed important initiatives like the Cybertruck and Robotaxi. The Cybertruck's release has already been postponed twice by the business. Musk said during the company's second AI Day that the Tesla bot ought to be prepared for mass production in 3 to 5 years. However, given that the automaker hasn't yet made many of its planned initiatives public, investors might want to take a step back and rethink things. There are still grounds to think Tesla can use this technology more effectively, even with the less than impressive improvements on the Tesla bot. The Tesla bot is frequently compared to items from well-known robotics firms like Boston Dynamics. Although Tesla is not attempting to create a robot that is as sophisticated and nimble as those produced by these businesses. To keep costs low, the automaker is only attempting to create a robot that will be functional and able to be produced in big quantities. At over $75,000, some Boston Dynamics robots are highly expensive and probably out of reach for the typical individual. However, Tesla is working on developing a robot that will be considerably more reasonably priced, perhaps as low as $20,000. Tesla appears to be more focused on creating a robot that can move from one place to another with a fair amount of hand dexterity and one that can comprehend and navigate its surroundings, even though its robot may not be as sophisticated as its competitors. Similarly, despite missing analyst forecasts in the previous quarter, Tesla still has a chance to record high delivery values in the fourth quarter. Wedbush analyst Dan Ives believes that rather than being the beginning of a weaker delivery trajectory into the fourth quarter of 2023, Tesla's current deliveries announcement is more of a logistical speed bump. He continued by saying that he thinks Tesla's unit setup for the fourth quarter is quite strong and may reach enormous figures in the 475,000 level. This is highly likely given that, according to a recent Reuters estimate, Tesla intends to build roughly 495,000 Model Y and Model 3 automobiles during the current year's fourth quarter. Roughly 95% of Tesla's electric vehicle production is comprised of these two automobile models. In a similar vein, the business is increasing output at its recently opened gigafactories in Berlin and Texas. The carmaker said earlier this month that it has successfully increased production at its gigafactory in Berlin to 2,000 electric vehicles per week for the first time. Additionally, 10,000 Model Ys were produced in its Texas location recently. Production at Tesla's gigafactory in Shanghai is also significantly increasing. Dan Ives expressed optimism on Tesla's Q4 deliveries, but he also said that until more information is provided during Tesla's conference call on October 19, concerns regarding the company's demand problems would continue. While some